Let's start off with the NSE 20, the fact that we traded relatively sideways. We have been seeing gains coming through over the last couple of sessions, so perhaps investors just taking a bit of a breather today.
Although we saw a lot of foreign participation in the market, they accounted for about 53% of total turnover. We also saw them taking up positions in the financial sector, KCB and Barclays, because they which contribute mostly to the rise in the index, although marginally by 1.51. Foreign participation was quite high on both sides of they played both sides of the market, both buy positions and sell positions. We're still seeing fund managers coming in trying to get bargains from the market. So we should expect, as we draw closer to third quarter earnings reports, we should expect the financial sector to keep picking up.
Well, let's focus on the fixed income market because that's, of course, your forte. Just looking at the movements over the last few sessions, it seems that we haven't really been seeing any significant moves given the fact that we have been waiting for those new auction rules. What is the status of that?
Actually, the meeting just ended roughly about 15 minutes ago.
Yeah.
The market stakeholders were discussing on what they felt about the new auction rules. They're not yet in place, but one part that most stakeholders feel that would be unfair to the market is the fact that any bids above the cutoff rate would be allotted at the cutoff rate, which has brought about a lot of contention. With this contention, if this is not resolved before the upcoming primary for the 2-year paper, we might not see that much enthusiasm for the paper. And also it may affect secondary market trading. Currently, market trading has been, let's say, rather low at about levels of between 1.5 to 1 billion. Today, we're still seeing a few players coming in to try to take up positions on the short end in preparation for the upcoming primary. But other than that, most activity is still focused on the new infrastructure bond that was issued last month.
Because we've been seeing quite high liquidity when it comes to the T-bills in the country, and of course a lot of appetite coming to the fore. Are you saying that most investors are going to start sitting on the sidelines with these new auction rules, or do you think that it's something that will pass?
If the contentious issues are not ironed out, I think a lot of players will sit on the sidelines for this particular upcoming auction.
Kenneth, also just looking at the shilling, because the central bank has been vocal about the strength that has come through and we're trying to keep it in a very tight range. Do you think we're going to break through key levels, because that 80-40 level to the US dollar is relatively key? If we do breach that, we could see some more strength ensuing. Do you think the central bank is going to be relatively active to ensure that it does stay between, say, around 850 and 8120?
The central bank has already been in the market once this week.
Yeah.
They were expected to come in today, which I would say mostly contributed to the strengthening of the dollar during the morning session. But once they indicated that they would not be in the market today, the shilling strengthened somewhat. But I would expect they'll come back in the market. Maybe I don't expect them again this week. Maybe in the coming week, because when central bank indicates it may be in the market, that's when we actually see the dollar strengthening as people begin to take up positions in preparation for the CBK buying up dollars.
Well, Kenya's bond market has jumped more than around 6 times in the first 8 months of this year from the same period last year. Banks putting cash into bonds rather than lending, and government's debt issues are growing quite extensively. How do you see this trend changing over the long term? Do you think that it's pretty much going to be something that is going to be intact for the next couple of years?
What's happening is that the central bank is intent on keeping interest levels, keeping a low interest level environment to foster the growth of the economy, to foster economic growth. So I think it should hold at least for the next 1 year, one year to 18 months. But at some point, of course, as growth picks up, we should begin to feel upward pressure on interest rates.
Well, Kenneth, just looking at what the Mauritian central bank is proposing to not allow banks to have massive exposure to the bonds in the country, purely because it is driving yields down, and apart from that, banks are then not lending to people on the ground. Are you concerned that a similar thing is going to play out in Kenya?
Yes, it may, because but not in the short run, because what the central bank has been trying to do since the beginning of the last financial year is bring down the lending rates that banks lend to the private sector. They've not been very successful so far, with only marginal declines, with the average lending rate being at about 14.48%. So as long as the lending rates remain at those levels, I think we should see this low interest environment maintained, and also participation in the bonds market encouraged.